privilege to- It is my proud privilege to welcome all the participants today. I am really thankful to all of you for continuing to join for the 10 days certificate course, and today is the last day of our course. And we are going to end this with a very important subject today, which is interplay of GST with other laws. Uh, because the reason why we kept this topic is that generally, as a chartered accountant, we generally forget that there are so many other laws which have a great impact on the taxation laws, because tax is not just a tax law, but it is an entire business law that we have to keep in mind. And to take care of these aspects, we have a very learned speaker today. So I will now hand it over to Sakshi, who is the moderator for the day, to take this forward. Thank you so much.
Thank you so much, sir, for giving a wonderful kickstart to the session. Of course, it is the last day and the learning should not stop. And we have a very relevant topic for discussion with a very esteemed speaker. And it's my indeed privilege to introduce our speaker because Vinay sir has been very instrumental in shaping my career. So I'm already honored to be here being the moderator of the session. I would now introduce sir to all the participants. Advocate Vinay Shroff, LLB, FCA, AICWA, ACS, Advanced Diploma in Management Accounting from CIMA London, is practicing as an advocate at various high courts and the Supreme Court of India. He specializes in the area of constitutional matters, direct and indirect taxation, foreign trade policy, FEMA, international taxation, economic offenses like black money, money laundering, Benami Property Act, criminal laws relating to tax and economic offenses, animal welfare laws, etc. Sir, we are really honored to have you here and we are looking forward to a wonderful session. Over to you, sir.
Thank you, Sakshi. I'm really delighted uh, to have this privilege and honor to deliver this session today with ICAI and ACAE. So I am really thankful to all the executive committee members for giving me this opportunity. So there are a lot of interplays which I am going to discuss today. And I would love if there is a continuous interaction with the participants, because that is how I would also learn from the experience of the various learned members which are there today with all of us. Most of them are chartered accountants and they are, I believe, much more learned than me. And therefore, I would be happy if we have an interactive session and the participants are allowed to intervene. And I think that facility is available, Sakshi. Can you allow the participants to
Yes, sir, absolutely.
participate?
Absolutely, sir.
Okay, that would be great. So what I'm going to do is that I don't want to make it too content heavy, since already so much of topic which is their subject matter of discussion today. I am going to pick up topic one by one, and to the extent possible, we'll try to finish it off. So the sequence of discussion today would be: first, I will discuss interplay between GST and customs law, then GST and income tax act, GST and sale of goods act. Then there is a interplay between GST and Bharatiya Sakshya Adhiniyam, that is the Evidence Act. Now it is Bharatiya Sakshya Adhiniyam. Then interplay between CPC, that is Code of Civil Procedure, and CrPC, which is now under the new regime, it is known as Bharatiya Nagrik Suraksha Sanghita. So for short, I will refer to it as BNSS, Bharatiya Nagrik Suraksha Sanghita. That is, erstwhile CrPC is now Bharatiya Nagrik Suraksha Sanghita. So we will refer to as BNSS. So to start with, Yes, yes, Misraji, it is BNSS. Correct. You're right. So to start with the interplay between GST and customs. Now, first proviso to section 14 of the Custom Acts provides that transaction value shall include, in addition to the price, transaction price, any amount which is paid or payable towards cost of payable for various types of cost and services for the purpose of import. For example, commissions and brokerage, engineering, design work, royalties and license fee, cost of transportation to the place of importation, insurance, loading, unloading, and handling charges to the extent and the manner specified in the rules made in this behalf. So all these various costs and charges, if they are paid or payable towards the goods which are being imported, whether as part of the import price or whether in addition to the price, then customs duty is payable. So what are the various cost and services? Commissions and brokerages, engineering, design work, royalties and license fee, cost of transportation to the place of importation, insurance, loading, unloading, and handling charges. Now, once these are part of the customs valuation, then they not only suffer the customs duty, but they also suffer simultaneously IGST, that is integrated goods and service tax. So the question arises whether once all these expenses have already borne the burden of IGST as part of the cost of the value of the goods, then whether RCM is liable to be paid on the same. Now, as far as the ocean freight is concerned, now the issue is settled by way of the judgment of the Honorable Supreme Court in Mohit Minerals. But with respect to the other expenses, the law is not so well settled. Probably because the expenditure is not so, transaction to transactions, not so heavy, or maybe they are now being included in the price of the cost of the goods itself to avoid the double taxation. But nevertheless, if they are already part of the price of the goods, but in addition, any cost towards say engineering or commission and brokerage is available, is payable, then as of now, it will suffer double taxation by virtue of the RCM under with respect to the services component of it, as well as by including this cost in the transaction value of the goods. Now, as far as royalty and license fees is concerned, there is a specific exemption by way of notification number 6/2018, dated 25/1/2018, which says that if the integrated IGST has been paid already on the value of the goods on royalty and license fees, then there is an exemption from RCM. So obviously, if there is an exemption with respect to royalty and license fees, but there is no exemption with respect to other services such as commission and brokerage, engineering and design work, which form part of the transaction value and wherein customs duty as well as IGST has already been paid, then it will result into double taxation. And as of now, it will violate the fundamental principle of GST, which is to cascading effect of tax. So probably these matters, the issue of the double taxation in time to come will be resolved by the courts and tribunals. But as of now, on the basis of law as it exists, IGST under RCM as well as part of the cost of the value of goods will be payable on services such as commission and brokerage, engineering and design work, etc., if they are paid in addition to the transaction value of the imported goods. Now, the second issue with respect to interplay with the customs, which I wish to discuss, is the taxability in the context of duty-free shops. Now, duty-free shops in airports are a global market competing themselves in a tax-exempt environment, and they compete with international brands and international products which are similarly set up and where they are across the globe as a matter of practice exempted from duties and taxes. That is why they are known as duty-free shops. In the previous regime of the value-added central sales tax and service tax, there was a judgment of the Honorable Supreme Court in the case of ITDC Limited Hotel Asoka versus the Assistant Commissioner of the Commercial Taxes, wherein the Honorable Supreme Court categorically decided that since in a duty-free shop, the transactions take place outside the customs frontier of India, because the duty-free shops are a special warehouse registered within the purview of the Customs Act, and they are considered to be outside the customs frontier of India. And it was held by the Honorable Supreme Court, since the transaction takes place outside the customs frontier of India, therefore the transactions are akin to having taken place outside India, and therefore, looking at the provision of Section 2, subsection 11 of the Customs Act and Article 286 of the Constitution of India, the transaction would be said to have taken place outside India. And once they are imported into the territory of India, or the goods are sold to the passengers who are outgoing, then no tax can be levied. However, under the GST, the dispute arose with the advance ruling pronounced by Delhi Advanced Ruling Authority, wherein a contrary view was taken, holding that supplies made by duty-free shops is amenable to GST, as export under GST takes place only when the goods cross territorial water or air space of India and not merely on crossing customs frontier. So it was distinguished that in the GST Act, the definition of export is not analogous to the central CST or the Customs Act, wherein the issue of customs frontier of India is important. But here it must cross the territorial water or air space of India, and therefore they are taxable. Now, subsequent to that, there was a exemption notification issued by the government, wherein the export, wherein if the goods are sold to a outgoing international tourist, then it was the government exempted it by way of a subsequent notification. And with respect to inbound international passengers also, the central government, by order dated 31st of August 2018, in Aris Altaf Tilwala, it was held that the supply of goods from the arrival duty-free shops is treated as export by the duty-free shops, and the passengers who buys from such duty-free shops and thereafter crosses the custom barriers, files import declaration and becomes importer. And this position was also affirmed by the Supreme Court by rejecting the writ petition filed against this central government order. And therefore, Now, the goods supplied to the inbound international passengers also is not liable to GST and rather would be eligible for refund. And with effect from 1st of February 2019, Schedule 3 to the CGST Act was also amended to include an entry stating that supply of warehouse goods to any person before clearance to home consumption is neither considered a supply of goods nor as a supply of service. So with this amendment, the question of levy of ICC does not apply because the duty-free shops are considered to be within the precincts of the warehoused goods. So if the supply of the warehouse goods is made to any person before clearance for home consumption, then it will not be considered either a supply of goods or supply of services. Now the third, and I believe the most important aspects, which is an interplay with the customs law, I would like to discuss is the adoption of the general rule of interpretation of the customs tariff, as well as the section and chapter notes and explanatory notes to the first schedule for the interpretation of the notification number 1 2017, which prescribed the rate of tax. So now for interpretation of any heading, subheading, chapter, or for ascertaining what the product is, we have to take a recourse to the rules for interpretation of the first schedule to the Customs Tariff Act. Now, let me elaborate it further. Now, the classification of the goods. Now, this also has huge significance because in the GST Act, there are about 5 rate of tax: 0, 5%, 12%, 18%, and 28%. And within this, there is a residual entry 453 of Schedule 3, which says that if the goods does not fall within any of the other schedule to the rate notification, then it will be classifiable under serial number 453 of Schedule 3 and be taxable at the rate of 18%. So already number of classification disputes are going on, wherein the item is taxable wherein the item is taxable either at the rate of 5% or 12%. And I believe a lot of classification disputes will arise in the future because of this residual entry as well as the multiple rate of taxation, where obviously the revenue will try to maximize its revenue and will try to classify the goods which are falling within the 5% rate bracket or 12% rate bracket to the next bracket. 5% may be classified under the 12 or 18, or 12 may be classified under 18. 28, there are very few items. So probability of dispute from 5, 12, and 18 to 28 is not so high. But definitely the goods which are falling under the 5% and 12%, there is a lot of dispute which are already going on with respect to classification. And in time to come, these disputes are further going to rise. Now, another issue is that there are certain anomalies also with respect to whether an item is goods or service. For example, an intellectual property rights is considered as good for the purpose of customs, whereas under the GST, by virtue of entry 5C of the Schedule 2 to the CGST, the same is classified as service. So once it is imported, it may so happen that the intellectual property right suffers IGST under the Customs Act and the customs duty and at the same time it suffers the RCM also by virtue of being imported as a service. So these are the issues which are yet to be resolved. But with respect to the classification of the goods, definitely we need to refer to the rules of interpretation of the customs tariff and the section and chapter notes and the general explanatory notes. Now, I would just like to take you quickly through what is the rule for interpretation of the first schedule and how a section in chapter notes looks like. Because I am not too sure whether all of you have gone through it or had the occasion to go through it. But nevertheless, I will take you through the general rule for interpretation of the import tariff. As you can see, it is part of the customs tariff. And the general rule for interpretation of the import tariff says the titles of the sections, chapter and subchapters are provided I hope it is visible and readable to all. Sakshi, is it readable?
Yes, sir, it is readable.
Okay. So classification, the titles, the rule for interpretation says that the title of sections, chapters and subchapters are provided for ease of reference only. For legal purposes, classification shall be determined according to the terms of the heading and any relative section or chapter notes, and provided such headings or notes do not otherwise require according to the following provision. So this is very important. So what you see in the description column of the rate notification is nothing but the title of the section, chapter and subchapter, which are provided for ease of reference only. And we have to classify the product according to the rules which are referred herein. Now, I am not going to go to each and every rule to understand what they state, but only two rules which I think are most important, Rule 3A and 3B, which are more often than not comes to use. Rule 3A says that the heading which provides the most specific description shall be preferred to the headings providing a more general description. So, more often than not, whenever any dispute between in the classification is happening at present, you will find that if there are two competing headings, then one heading will provide more specific description and one will be general in nature. So this rule will comes to the rescue, and there are a number of Supreme Court judgments also on this particular issue. One is that the specific will prevail over the general. Secondly, specific will prevail over the residuary. So a lot of attempt is being made by the revenue authorities to consign the goods to the residual category at serial number 453 of the schedule 3 also. The reason being that the rate notification only covers approximately 1,211 items at the 4-digit HSN classification level. Whereas the total number of items at the 8-digit level in the customs tariff is about 11,000. So the roughly 89% of the items are not described at all in the rate notification. If you look at the erstwhile central excise tariff, it was almost akin to customs tariff. So there was no confusion at all. But in the rate notification of the GST, unfortunately, only 11% of the items which finds its place in the customs tariff are covered, and 89% are, I would say, orphaned. They are not finding a place in the rate notification. So obviously we have to refer to the customs tariff and find out where they are classifiable. And this particular rule, the heading which provides the most specific description to a general description, will come to our rescue. More often than not, you would find that the revenue tries to mix it up and tries to take it to another general category or an obscure category, or in where they are not able to find any entry, then they will take it to the residual entry at 453, because residual entry has no description. So anything which is not classifiable elsewhere by description is classifiable under residual entry at serial number 453, which will attract 18% of the tax. So it is very easy for the revenue authority to say that, look, what you are describing in your invoice is not matching with how the description is given in the rate notification. So you will go to the residuary category. Then we have to look up at the customs tariff and see whether the manner in which we are describing is matching with the 6-digit label or the 8-digit label, or by means of any other rule of interpretation, it can be classified under any particular category. For example, let us look at rule 3B. Mixtures, composite goods consisting of different materials or made up of different components, or goods put up in set for retail sale, which cannot be classified by reference to A, shall be classified if they are consisting of material or component which gives them their essential character. So if there is a composite goods, for example, a good is manufactured by composite item. For example, let me give an example of fly ash block, which is a subject matter of dispute at present, particularly in the state of West Bengal. Here, the predominant item is fly ash. And cement is also used as a material for binding. Now, the department is saying it is classifiable as an article of cement and not as fly ash block or bricks. So now this 3B will comes to our rescue, wherein we can say that, look, fly ash is the material which is giving it their essential character. The material, this particular product is known in the market as a fly ash brick or block. So the cement, which is only used as a binding material for the purpose of binding of the fly ash to give it the character of a brick, is the material which gives it their essential character, and therefore it will classify as a fly ash. Now let me just show you how a tariff looks like in the customs. There are, as you can see, 21 sections. Now each section may or may not proceed with a section note. For example, I will show you with respect to textile. Textile, as you can see, is falling in section 11. Now it has a section note. Note is there, it is a section note. Now this note gives you description or clarification of how the item has to be understood. For example, it said what it does not cover. This section does not cover. Now look at section this note 2 capital A. Goods classifiable in chapter 50 to 55 or in heading 5809 or 5902 and of a mixture of two or more textile materials are to be classified as if consisting wholly of that one textile material which predominates by weight over any other single textile material. Further, it says when no one textile material predominates by weight, the goods are to be classified as if consisting wholly of one textile material, which is wholly covered by the hedging, which occurs last in the numerical order among those which equally merit consideration. So as you can see, there are various rules, I would say rules for the purpose of determining how a product has to be identified and how it has to be classified. I'm just 1 second. Hmm. Now let us look at some other, try to understand what is the meaning of chapter note. Now look at chapter 54. Man-made filaments, strip, and the like of man-made textile material. Throughout this schedule, the term man-made fibers means staple fibers and filaments of organic polymers produced by manufacturing process either. Then it says how polymerization of organic monomers to produce polymers such as polyamides, polyester, polyphenylens, and so on and so forth. Then it further says what is synthetic, what is artificial in relation to fiber, and so on and all that. So this is what is called chapter and section note, which is essential for us to go through to correctly classify a item. In addition to this, it is also important to refer to HSN explanatory note. Now, you would not find the HSN explanatory note in your customs tariff book. HSN is a harmonized system of nomenclature which has been adopted by the customs tariff for the purpose of classification. Now, the purpose of HSN or harmonized system nomenclature is that internationally a product is identified in a particular manner by a particular code. So against each code, an item is described in a particular manner. Now that particular code and that particular description is adopted by all the countries which does international trade, so that it is to identify an item of trade. Now this book of harmonized system of nomenclature has explanatory note in greater detail with respect to most of the headings, subheadings, which is up to 6 digit. In India, we have subheading up to 8 digit, but in HSN, it is up to 6 digit. And there is a very well detailed explanatory note, which is there in the HSN. So we need to refer to that HSN for the purpose of classification. So with this, I conclude my discussion about the interplay between GST and customs. Sakshi, is there any question or anything relating to this particular issue? Is this topic very clear?
So I guess there's no question with respect to this issue
Hmm.
in the chat box yet, but maybe we can wait for maybe a minute or so for the participants to send in their questions if they have any.
Right. Is this discussion going well? I mean, it is, am I clear in my,
Yes, sir, absolutely. It's very enriching and absolutely clear, sir.
okay, thank you. Now, the next issue which I'm going to discuss is interplay between Income Tax Act and GST. Now, where is the interplay? There is no interplay as such between Income Tax Act and GST as such. But what I would say is that there are jurisprudence under the Income Tax Act which is very useful for decoding the GST Act, particularly with respect to provision of input tax credit. Now, Section 16 allows ITC on goods and services which are used or intended to be used in the course or furtherance of business. Similarly, Section 37. So, ITC is allowed when? For the purchase of goods and services, which is an expenditure for me. And when the ITC is allowed, if I am using it in the course or furtherance of business. Similarly, under the Income Tax Act, a deduction with respect to an expenditure is allowed if the expenditure is wholly or exclusively laid out for the purpose of business or profession. So if you see, the language may be different, but the ratio, or what you would say, the underlying principle of both the sections are more or less the same, that if an expenditure is laid out for the purpose or in the course of business or for the furtherance of business or for the purpose of business, it should be allowed. So ITC should be allowed, the expenditure should be allowed. Now here, what I'm coming across is that some officer are, while dealing with the question of allowability of ITC, are questioning even the very purpose of expenditure. For example, if you are claiming a deduction with respect to your hotel expenditure, obviously the expenditure on food is falling within Section 17(5), but not the hotel expenses if it is incurred for the purpose of travel. Or for example, repair and maintenance expenditure which are capitalized in the books of accounts, which is not falling within the purview of Section 17(5). So there are various expenditures which are incurred in the course of business or profession. And the issue is to what extent a assessing officer can go and question the necessity of incurring that expense. And what are the details that he can seek to establish that the expenditures are genuine and they have been laid out for the purpose in the course or furtherance of business. Now here, there are several judgments of the Honorable Supreme Court in the context of Income Tax Act, wherein it has been held that the officer may examine whether the payment is real or not so. But once it has been laid out for the purpose of business or commerce, then it is not for the officer of the income tax to sit in the judgment of the commercial expediency. It is not for him to sit in the armchair of the businessman. He cannot substitute himself as a businessman. It is the only businessman who has to decide. For example, there may be a case where there is a loss. The business is running into substantial loss, and ITC is more than the output tax. So he might say that I will not allow the ITC in such a scenario more than what is, and it has happened in past in the context of the VAT and central excise law, where if the assessee is regularly incurring loss, then his admissibility of input tax credit or SEDVAT credit or VAT credit was questioned. So the Honorable Supreme Court in various judgments, for example, Supreme Court in CIT versus Walchand and Company, reported in 1967, Volume 3, SCR 214. Then SA Builders Limited versus SIT, reported in 2007, Volume 158, Taxman, page number 74. It has been held that the income tax authorities must put themselves in the shoes of assessee and see how a prudent business would act. They should not look from their own viewpoint, from the point of a prudent businessman. And it has been repeatedly held by the Honorable Supreme Court that for the purpose of business is wider in its scope than the expression for the purpose of earning profit. So even if it is resulting into loss, the assessing officer cannot say that I will not allow you the expenditure or I will not allow you the ITC because you are incurring a loss. So I think these are the judgments, and there are many more which are very useful in the time to come for the purpose of defending the eligibility to claim input tax credit. Second thing is, with respect to interplay with the Income Tax Act, is we have seen in the context of service tax law that whenever a limitation is about to expire, and we are also seeing in the context of GST that whenever there is a limitation is expiring, then without conducting any inquiry or someone or any investigation, the so-called notice is issued merely on the basis of the income reflected in Form 26AS. Now, it has been repeatedly held by the honorable tribunals, sestate, in the context of particularly service tax law. There are numerous judgments which says that until and unless a clear analysis of activity of the SSC is done and it is ascertained whether the activity is taxable, merely on the basis of Form 26AS, it cannot be held that it is taxable under the service tax provision also. So in the context of GST also, first of all, the assessing officer before issuance of the so-called notice must satisfy himself that it is falling within the purview of the definition of supply under Section 7. Without conducting such an exercise, merely on the basis of assumption and presumption that whatever income has been earned is liable to GST, a so-called notice cannot be issued. And such a so-called notice is certainly a defective so-called notice and liable to be set aside on that ground alone, without going into the merits of the case. Even if, for example, some of the activity is taxable, once the so-called notice is issued, then no further examination, because so-called notice cannot be a recourse to conduct investigation. Whatever investigation needs to be done should be done prior to the issuance of so-called notice. And if no such investigation is done, no analysis is done as to what activity is taxable, then merely on the basis of income tax return or Form 26AS, the taxability under GST law cannot be determined. Further, few things which I would like to highlight is that there is no concept of difference between capital income and revenue income, unlike the Income Tax Act. All that we need to determine is whether the income is falling within the purview of supply. For example, one is holding a personal asset and selling it, and it is crossing the taxable limit, taxable turnover under the GST, minimum taxable turnover under the GST. Then irrespective of the fact whether it is your personal asset, business asset, or whether it is a capital income in the hand of the recipient or revenue income, it will be taxable under the GST. So we have to eliminate that interplay with the Income Tax Act. Secondly, capitalization of expenditure in the books of account is relevant in the GST Act only to an extent that any repair and expenditure, repair and maintenance expenditure with respect to a immovable property is incurred. In immovable property is specifically blocked under section 17(5). But if it is an item of repair and maintenance to a immovable property, and if it is capitalized, it is not capitalized in the books of accounts, then ITC is admissible. So from that perspective, it gains importance. So if one wants to avail the benefit of ITC with respect to repair and maintenance and activity with respect to an immovable property, which is otherwise inadmissible, then it should not be capitalized. So that is very important, which has an interplay with the Income Tax Act also, because you have to judge as to what is more beneficial, whether claiming the ITC or whether claiming it as a revenue expenditure or whether claiming it as a capital expenditure. So all those aspects one need to very carefully analyze before taking a call about this. Now the next, I would discuss interplay between GST and Sale of Goods Act. Now, Section 1664, capital A of the Sale of Goods Act says that if there is a increase in the rate of tax or in new imposition of a tax subsequent to the entering of the contract, then if the contract is silent about it or there is no contrary intention in the contract, then such a new imposition or increase in the rate of tax will be added to the value of the contract by the supplier, and he shall be entitled to be paid for it and even sue for recovery of such an addition. So this particularly assumes importance in the context of government contract, because by and large I have seen that a lot of dispute is going on with respect to the GST rate not being revised by the government entities or the authorities post GST, introduction of the GST law, or even if there is a increase in the rate of tax subsequent to the entering of the contract, even in the GST regime. So one should take recourse to section 64 of the A of the Sale of Goods Act, and unless the contract specifically says that any such increase is not reimbursable, one can legitimately claim for such reimbursement by virtue of section 64 capital A of the Sale of Goods Act. Now I am going to discuss next next I am going to discuss the interplay between GST and Bharatiya Sakshya Adhiniyam, that is Evidence Act. Now let me tell you at the outset that as such, if you ask me whether Evidence Act is applicable to the GST Act, then the answer is no. Evidence Act as such, or the Bharatiya Sakshya Adhiniyam, which is how it is known now, is not applicable to the taxation laws. The Evidence Act or the Bharatiya Sakshya Adhiniyam is a procedural law which is designed to establish the rule for admissibility of evidence. But at the same time, while it is not directly applicable, and the rigors of the rules of evidence is not applicable, but the common law jurisprudence which has evolved over a period of time in the context of Evidence Act or Bharatiya Sakshya Adhiniyam as it is known now will be applicable. So now my endeavor would be to discuss some of the aspects of the Evidence Act which will be relevant for the purpose of defending any dispute arising within the context of the GST Act. Now, the first issue which I would like to discuss is the statement, relevancy of statement. Now, we have seen that many cases are based on the statement taken of a third party. For example, the input tax credit issue, wherein there is a demand of the reversal of the ITC. The case is based on, say, the statement of a supplier or the third party or a transporter or broker or any such person. Now, there are two aspects of it. One is that whether such a statement is subsequently retracted. Section 22A of the Bharati Saksh Adhiniyam, or BSA as would henceforth I would refer to. Section 22 of the BSA says that if any admission is taken and if it is established that it is taken on the grounds such as inducement, threat or promise, then such a statement has no evidentiary value. So suppose the person who has given the evidence and subsequently it has been retracted by way of an affidavit, which has to be filed obviously with the department, then such a statement, if we are able to establish, was taken under the duress or inducement or threat, then it will have no value in the eye of law. In this context, there is a judgment of the Honorable Supreme Court in the case of Vinod Solanki versus Union of India, reported in 2009, 233 volume, ELT page number 157, that the burden is on the prosecution to show that the confession is voluntary in nature and not obtained as an outcome of threat, if the same is relied upon solely for the purpose of securing a conviction. So if the statement is the only thing which a revenue officer is trying to rely upon to either demand a tax or convict, then the burden shifts to the revenue to show that the confession was voluntary or the statement was taken voluntary. And even if a retraction is done, the court will look into the circumstance at the time of retraction, the manner of the retraction, and the court will also look into the circumstance in which the statement was given to come at the outcome, whether it was voluntary or involuntary. So these are the aspects of the Evidence Act or the BSS which are squarely applicable to the GST Act also. The second aspect which I would like to deal is the burden of proof. Now, the burden of proof is a concept which I would first like to show you some of the sections of the BSS with respect to the burden of proof before I go into discuss its relevance under the GST Act. BSS. You can read with me. I will just read out some of the provisions of the BNS relating to the burden of proof. And there are illustrations under each section which will give you an idea of the jurisprudence. Whosoever, section 104 says, I will discuss the burden of proof whether it lies upon the revenue or the SSC under various circumstances. But first, let us try to have a look at the provision relating to burden of proof under the BSA, that is Bharatiya Sakshya Adhiniyam, as well known as the Evidence Act. Section 104 says that whosoever desires any court to give any judgment as to any legal right or liability dependent on the existence of facts, which he assert must prove that those facts exist. And when a person is bound to prove the existence of fact, it is said that the burden of proof lies on that person. For example, I will read out illustration B. A desires a court to give judgment that is entitled to certain land in the possession of B by reason of facts which he asserts and which B denies to be true. A must prove the existence of those facts. So A is claiming that he is the owner of certain land which is in possession of B, but he is unable to adduce any evidence to his ownership. Then B will be entitled to continue the possession of land despite the fact that he is also not in possession of the ownership, proof of ownership. Now 105. The burden of proof in a suit or proceeding lies on that person who would fail if no evidence at all were given on either side. Now I will read again B. A sues B for money due on bond. The execution of bond is admitted, but B says that it was obtained by fraud, which A denies. If no evidence were given on either side, A would succeed, as the bond is not disputed and the fraud is not proved. Therefore, the burden of proof is on B. So, A sues B for money due on a bond. Let us now look at an example of ITC fraud. The tax department says, now let us take an example with respect to first 104. Here, for example, the burden of proof of taxability. Now the revenue says that you are taxable in a particular manner, and files a case against an SSC. Now there are numerous judgments which says, for example, number one, I am giving an example. So the department is saying that you are taxable in a particular manner. Now the onus or the burden of proof is on the taxing authorities to show that a particular item is taxable in the manner claimed by them. They cannot merely make a bald assertion and say that it is taxable. The burden would lie upon them. For example, in the matter of classification, you are claiming that it is classifiable in a particular heading. Now the department says, no, not under this entry, but under a different entry. Your item is not this, but it is something else. Now the burden of proof would lie upon the department, not upon you. For example, the department says that you have claimed ITC by fraud, but merely makes a bald assertion without any evidence. Suppose the SSC produces the invoice, payment particulars, and challan. Now, the burden shifts to the department that why ITC should be denied to the SSC. Now let us look at section 106. The burden of proof as to any particular fact lies on that person who wishes the court to believe in its existence unless it is provided by any law that proof of that fact shall lie on any particular person. I will discuss everything one by one in the context of GST Act also. The burden of proving any fact necessary to be proved in order to enable any person to give evidence of any other fact is on the person who wishes to give such evidence. A wishes to prove, B, I am taking illustration B, prove by secondary evidence the contents of a lost document. A must prove that the document has been lost. When a person, 108 says, when a person is accused of any offense, the burden of proving the existence of circumstance, bringing the case within the any of the general exceptions in case of Bharatiya Nyaya Samhita 2013-23 or within special exception or provision contained in any other part or is upon him, and the court shall presume the absence of such circumstance. Then 109 says, when a fact is especially within the knowledge of any person, the burden of proving that fact is upon him. Now, these are the some of the provision relating to the burden of proof. Now, as such, if you ask me which section will apply to which circumstance, then I would not have any answer. But generally speaking, by borrowing this concept of burden of proof, the Honorable Supreme Court and various high courts have time to time imposed the liability of the burden of proof either on the SAC or on the revenue. For example, with respect to the taxability, if the department is claiming that the item is taxable in a particular manner, then the burden of proof is on the department. The leading judgment in this particular case is Union of India versus Garware Nylons Limited, reported in 1996, volume 10, SCC, page 413. Now, with respect to, say, taxability, there is another very celebrated judgment of the Honorable Supreme Court in the case of Commissioner of Customs versus Dilip Kumar and Company, reported in 2018, volume 9, SEC, page 1. Here the Honorable Supreme Court said that in every taxing statute, charging, computation and the exemption clause should be interpreted strictly. And in the case of ambiguity in charging provision, the benefit must necessarily go in favor of the SAC. But in case of an exemption notification, the benefit of ambiguity must be strictly interpreted in favor of the revenue. And with respect to charging provision, the Honorable Supreme Court referred to one judgment of the Govind Saran Ganga Saran, when the court said that the three components of a taxing statute, namely the subject of tax, person liable to pay tax, and the rate of tax which is to be levied, if there is any ambiguity in understanding any of the components, no tax can be levied till that ambiguity or defect is removed by the legislature. So, for example, suppose there is a dispute about the rate of tax, which is the subject matter of section 9, then it is a subject matter of charging provision. And the benefit of doubt or the benefit of doubt, if any, will be resolved in favor of the SAC. But at the same time, if it is a subject matter of section 11, that is, any exemption is given by virtue of by drawing power from section 11, then the benefit of ambiguity will go in favor of the revenue. So if you are claiming an exemption, then the burden of proof is upon you that you are eligible to claim that exemption. But if the department is seeking to tax it in a particular manner or classify it in a particular head, then the burden of proof is on the department. Similarly, for example, a case of clandestine removal or undervaluation. Now, in case of undervaluation, again, over a period of time, the jurisprudence has evolved that the onus to prove undervaluation is on the revenue. But once the revenue discharges the burden of proof by producing evidence of, say, that you are undervaluing, then the onus will shift to you to establish that the price indicated in the invoice is correct. Now, this is a judgment, one judgment in the context of Customs Act, that is Commissioner of Customs versus Visakhapatnam, Commissioner of Customs Visakhapatnam versus Agrawal Industries Limited, reported in 2011, volume 272, ELT 641, in the context of undervaluation. Now, let us have a look at the cases with respect to clandestine removal, that is removal of the goods without invoice. So here also, from time to time, the jurisprudence has evolved that once the allegation of clandestine removal is made, then the burden of proof is on the department, because it is a very serious allegation and the burden, first of all, will have to be discharged by the department. There are a number of judgments which we find in this particular case. One judgment which I would say lists various legal position with respect to clandestine removal is a Ahmedabad tribunal judgment. So there are judgments of various high courts also, one Supreme Court judgment also, but this particular judgment I would say that you must refer to, that is Arya Fibers Private Limited versus CCE Ahmedabad, reported in 2014, volume 311, ELT 529. Now here it was held that by the Honorable Tribunal that there should be tangible evidence of clandestine manufacture and clearance, not merely inferences on unwarranted assumptions. And there should be evidence laid down by the department with respect to the raw materials in excess of what has been contained in the statutory records, instances of actual removal of unaccounted finished goods from the factory without payment of duty, discovery of such finished goods outside the factory, instances of sale of such goods to identified parties, receipts of sale proceeds, whether by check or by cash, of such goods by the manufacturer or person authorized by him, use of electricity far in excess of what is necessary for manufacture of goods otherwise manufactured, statement of buyers with some details of illicit manufacture and clearance, proof of actual transportation of goods cleared without payment of duty, links between documents recovered during such activity and the activities being carried on in the factory of manufacture. So as you can see, there is a tall list which has to be complied by the department to discharge their burden of proof with respect to allegation of clandestine removal. There is a judgment of the Supreme Court also in the case of Oud Sugar Mills Limited versus Union of India, reported in 1978 to volume 2 ELT J172, where the Supreme Court pointed out that the inference drawn by the authority only on the basis of entries in ledgers would be insufficient. It was pointed out that in the factory where the turnover was considerable, an operation conducted involved a human element, it would not be right to base the conclusion only on surmises. So there are numerous such judgments which have from time to time laid down that in such cases the burden of proof is on the department. if they make any such serious allegation. Then one provision of the Evidence Act, which is very much relevant in the context of GST also, is the value of the opinion of an expert. As you can see that, I'm just, give me one moment. The section 153 of the GST Act prescribes that any officer not below the rank of assistant commissioner may, having regard to the nature and complexity of the case and the interest of revenue, take assistance of any expert at any stage of scrutiny, inquiry, investigation, or any proceeding before him. Usually, the value of expert is very, very significant in the cases of dispute of clandestine classification disputes, because one is claiming that an item is so and so, whereas the department is claiming, no, it is not this item, it is some other item. So usually in such cases, it is the expert only who can opine as to what is that item. Or suppose there is a dispute about the manufacturing process or what the item is, then it is only the expert who can give an opinion. And in this context, Section 45 of the Indian Evidence Act and the corresponding provision of Section 39, it stated that when the court has to form an opinion upon foreign law or science or art, or as to identity of handwriting or figure impression, the opinion upon that point of person especially skilled in such foreign law, science or art, or in question as to the identity of handwriting or finger impression are relevant facts. So therefore, Section 45 of the Evidence Act and corresponding Section 39 of the Bharatiya Sakshi Adhiniyam is very relevant to find out as to what circumstance the opinion of expert will have relevance. Because Section 153, while it lays down that the officer will have the power to take the assistance of an expert, but it does not specify the circumstance or what expert in what circumstance the opinion of expert should be taken. So I think there in this section 39 of the BSA is very useful. And I would refer to one judgment of the Supreme Court, Commissioner of Central Excise versus BHEL, reported in 2018, volume 10, GSTL, page 3. It was held that in the face of the opinion of expert and the HSN note, we are of the view that the primary authority as well as the first appellate authority was perfectly justified in coming to the conclusion that the components of boilers cleared as parts but essential to put into operation would be classifiable under subheading 8402.10 and not as claimed by revenue under subheading 8402.90. And there are numerous such judgments where the Honorable Supreme Court has said that if there is if suppose the SSE is relying upon the opinion of an expert and the department cannot brush it aside without any contrary opinion. Now, the next issue I would like to discuss, which is also very, very important, is the value of a certificate under Section 65B of the Evidence Act and corresponding section 63 of the Bharatiya Saksh Adhiniyam and section 145 of the CGST Act. Now, the crux of this provision is that suppose a search and survey operation is done and there is a electronic record which is found either in the mobile or say iPad or computer or any such electronic medium, or even on the say stored in a cloud. Then section 65B of the Bharatiya Saksh Adhiniyam, section 63 of the Bharatiya Saksh Adhiniyam, which was section 65B of the Evidence Act, says that there must be a certificate. Now, what that certificate should be? There is a judgment of the Honorable Supreme Court in the case of Anwar PB versus PK Wasir, reported in 2014, Volume 10, SCC 473, wherein is what held that any documentary evidence by way of an electronic record can be proved only in accordance with the procedure prescribed in Section 65B. Section 65B deals with the admissibility of electronic record. Now, the purpose of this provision is to sanctify secondary evidence in electronic form generated by a computer. And it said that the electronic record containing the information should have been produced by the computer during the period over which the same was regularly used to store or process information. The information was regularly fed into that computer in the ordinary course of said activity. During the material part of the said period computer was operating properly. And if it was not operating properly for some time, the break or breaks had not affected either record or accuracy of its content. And the information contained in record should be reproduction or derivation from the information fed into the computer in the ordinary course of activity. Further, it said that if any statement in any proceeding is dependent on such an electronic record or a computer printout, then there must be a certificate which identifies the electronic record containing the statement, and the certificate must describe the manner in which the electronic record was produced. And certificate must be signed by a person occupying a responsible official position in relation to the operation of the relevant device. Now, there is section 145 under the GST Act also, which says almost analogous things. And there was section 36B of the Central Excise Act, which was analogous to this section 145 or section 65B or 63 of the BSA. And there are several judgments. One is Honorable Odisha High Court, very recent judgment, reported in 2023, page 2, Sentex 249, which says that without a certificate as mandated under section 36B accompanying the printout, it cannot be relied upon department in the adjudication proceeding. Similar decision was held by the Honorable Delhi High Court, and there are numerous tribunal judgments which says that the condition of section 65B2 of the Evidence Act is perimetria with section 36B of the Central Excise Act, and no reliance can be placed on any computer printout unless that printout is accompanied with the certificate as prescribed in section 65B, as has been held by the Honorable Supreme Court. And therefore, if any allegation of clandestine removal or any such allegation of denial of ITC or any such thing is done on the basis of a computer printout, then this defense, if unless and until the department is producing such a certificate, we should take a defense that it is not accompanied by the necessary certificate and the entire proceeding is invalid for want of such a certificate. Now, I must tell you that in the Bharatiya Saksh Adhiniyam section 63, Now there is a format of certificate also under section 63. And it is in two parts. Part A contains is to be filed by the party who is producing such electronic record, and part B is to be filled by an expert. Now this format is neither prescribed in the GST Act nor it was prescribed in the erstwhile Evidence Act. But I believe after the introduction of the Bharatiya Sakshi Adhiniyam, if any certificate is produced by the department, then they must adhere to the requirement of the format of this certificate, which is prescribed in Bharatiya Sakshi Adhiniyam, even though this certificate as such is not part and parcel of the GST Act. Now, with respect to yes. So with respect to Evidence Act, I conclude my talk. Now I come to the interplay between the GST Act and the Code of Civil Procedure. What are two things I would like to discuss with respect to the interplay between Code of Civil Procedure and GST. Because time is running out, it is already about 6:30. One is that section 70 with respect to power to summon very specifically says that the power officer under this act shall have the power to summon any person whose attendance he considers necessary either to give evidence or to produce a document or any other thing in any inquiry in the manner as provided in the case of a civil court under the provision of the Code of Civil Procedure 1908. So section 70 very specifically refers to the Code of Civil Procedure. Now section 27 specifies that the summon must be served in a prescribed manner. Section 27 of the Code of Civil Procedure, CPC. Now further Rule 4 of the Order 5 of the CPC states that the personal appearance cannot be ordered if the person resides outside the local jurisdiction of the officer or court. So for example, an officer in Delhi is asking a person to be personally present. Say, for example, say DGGI is asking a person situated in Calcutta to present himself before Delhi DGGI, whether it is valid in accordance with Rule 4 of Order 5 of the CPC. Now, what Rule 4 of Order 4 says? That he can only order a person to appear before whom which is within his local jurisdiction. Now we know that the DGGI has all India jurisdiction. So DGGI officer, even though he is sitting in Delhi, since he has all India jurisdiction, so he can call a person to appear before him from anywhere. Or for example, a DGGI officer sitting in Calcutta can ask a person to appear before him from anywhere in India. But suppose a officer, jurisdictional officer based in Calcutta, cannot ask a Delhi resident to appear before him because his jurisdiction is limited to Calcutta. Similarly, a Delhi officer who is only a jurisdictional officer has no authority to call a person to appear before him in accordance with Rule 4 of the Order 4 of the CPT for seeking his personal appearance. But nevertheless, if he is only asking for a documents to be furnished to him without personal appearance, then that is permissible. But personal appearance cannot be asked for by a jurisdictional officer. But if an officer has been given a all India jurisdiction, then he can certainly ask for personal appearance. The second concept of the CPC, which I would like to discuss, is the concept of res judicata, whether it has application to the taxation laws. Now, res judicata is specified in section 11 of the CPC, which says that no court shall try any suit or issue in which matter directly or substantially in issue has been directly and substantially in issue in a former suit between the same parties or between parties under whom they are or any claim litigating under the same title in a court competent to try such subsequent suit or the suit in which the issue has been subsequently raised and has been heard and finally decided by the court. And there is also section 10 of the CPC, which says that no court shall proceed with the trial of any suit in which the matter in issue is already directly and substantially in issue in a previously instituted suit between the same parties or between parties under whom they are or under any claim litigating under the same title, when such suit is pending in same or any other court in India having the jurisdiction to grant relief. So these are the two concepts which I would like to discuss whether they are applicable to the GST law. Now, section 10, stay of the suit. Now, the sum and substance of section 10 of the CPC is that if any suit is proceeding in any particular court, then no other court shall initiate a suit with respect to the same subject matter between the same parties. Now, similar provision already exists in section 6(2)(b) of the GST Act, that if central officer has initiated any proceeding on a subject matter, then state officer will not initiate, and if the state officer is initiated, then the central officer will not initiate. But nothing bars different wings of the same department to initiate a proceeding. For example, the audit department or the investigation department of either state or the central authority, there is no bar under section 6. So therefore, I believe section 10 will come to the rescue, which very clearly says that if any proceeding is pending before any court or any authority between the same parties, then no other court shall proceed with the suit on the same subject matter. So the subject matter should be the same. Now, the concept of res judicata is that if any issue is already settled within the two parties, then there should not be a repetitive litigation on the same subject matter between the same parties. Now, there are a number of judgments in the taxation laws that the concept of res judicata does not apply to the taxation laws. Fine. But nevertheless, there is a precedential value. So the doctrine of precedent obviously applies. And if any particular matter in the same issue is already settled between the same parties, then irrespective of the fact that in view of the various judgments of the various Supreme Court and the High Court, that the concept of res judicata as it is found in section 11 of the CPC does not apply, but nothing prevents us to refer to the doctrine of the precedent and achieve the same result. Now, lastly, I'll discuss the interplay between GST and CrPC, or GST or Bharatiya Nagrik Suraksha Sanhita, or BNSS, as I am going to refer to it in short henceforth. So the first and foremost, we need to understand that while the power to arrest is there within the purview of the GST Act, but nevertheless, the procedural safeguards with respect to the manner of arrest is not there. Further, the manner in which the trial has to take place once the arrest has been done and the prosecution of launched, that also the procedure of the trial is also not there in the GST Act. So obviously we have to take recourse to the BNSS for such procedural safeguards with respect to the manner of arrest and the right of an arrestee in case of an arrest. Now, I would just quickly refer to some of the provisions of the BNSS, and then I'm going to discuss it in detail. Just give me a moment. Let us start with section 4, which says that all section 4 subsection 2, all offences under any other law shall be investigated, inquired into, tried, and otherwise dealt with in accordance with the same provision, but subject to any amendment for the time being in force regulating the manner or place of investigating, inquiring into, trying, or otherwise dealing with such offences. So if there is anything provided under any other law, then only it can be investigated, inquired into, tried under that law. But since the manner of trial is not provided in the GST Act, so it has to be tried in accordance with section 4(1) and accordingly dealt with. For the limited purpose of investigation and inquiry, we have provision under the GST Act, but as far as trial is concerned, nothing is provided under the GST Act as to how the trial will take place. Now, section 35, you see, it provides in detail the procedural safeguard of a person who has been arrested. Now, this section 35 is perimetria with the section 41B, 41C, and 41D in parts of the CrPC, wherein the guideline was framed by the Honorable Supreme Court in the case of D.K. Basu with respect to procedural safeguards or guideline for the purpose of arrest. This is the most celebrated judgment with respect to the guidelines with respect to the purpose of arrest. So now let us first have a look at this judgment of the Honorable Supreme Court in the case of D.K. Basu versus the State of West Bengal, reported in AIR 1997 SC 610, wherein the guidelines which were issued for the purpose of arrest is that the police person carrying out the arrest and handling the interrogation of the arrestee should bear accurate, visible, and clear identification in name text with their designation. The particulars of such police person who handle interrogation of the arrestee must be recorded in a register. The police officer carrying out the arrest of the arrestee shall prepare a memo of arrest at the time of arrest, and such memo shall be attested by at least one witness who may be either a member of the family of the arrestee or a respectable person of the locality from where the arrest is made, and it shall be countersigned by the arrestee and shall contain the time and date of the arrest. A person who has been arrested or detained and is being held in custody in a police station or interrogation center or other lockup shall be entitled to have one friend or relative or other person known to him or having interest in his welfare being informed as soon as practicable that is being arrested and is being detained at that particular place, and the attending witness of the memo or arrest, unless the attesting witness of the memo of arrest is himself such a friend. So as soon as one is arrested, his friend or his relative must be informed. And further, the time, place, and venue of the arrestee shall be notified by the police to the friend or relative. The person arrested must be made aware of his right to have someone informed of his arrest or detention as soon as he put into arrest. And further, he must be subjected to medical examination within 48 hours of his detention. The arrestee must be permitted to meet his lawyer during interrogation throughout, though not throughout the interrogation. And there are other guidelines also. I'm not going to go into the details of those guidelines, but a large part of those guidelines are already incorporated in Section 35 of the BNSS. Section 35 plus Section 36 also. Then as you can see, Section 38 also. Then Section 43 is very important as to how the arrest is to be made. This is the right of an arrestee. Here it says that in making an arrest, the police officer or other person making the same shall actually touch or confine the body of the person to be arrested, unless there be a submission to the custody by word or action. Provided that where a woman is arrested under the circumstance warrant to the contrary, her submission to the custody on an oral intimation of arrest shall be presumed unless the circumstance otherwise require, and unless the police officer is a female, the police officer shall not touch the person of the moment for making her arrest and give the information regarding the such arrest and place where she is being held to any of her relatives, friends, or such other person as may be disclosed or mentioned by her for the purpose of such information. Now, Section 43 further elaborates the manner of arrest. Then let us refer to Section 45, 46, 47, regarding the mode and manner of arrest. So what I'm trying to bring to your knowledge is that whenever any arrest is made, that since there are no procedural and legal safeguards regarding the rights of an arrestee and the mode and manner of an arrestee, we have to take recourse to the provision of CrPC. Further, Section 132 prescribes what is a cognizable and bailable offense and what is a non-cognizable and non-bailable offense. Now, these are not defined in the GST Act. Now, the bailable offense and non-bailable offense, let us try to understand that first, because that is very important. Bailable offense means then my right to be granted bail is absolute. So as soon as I am arrested, on furnishing of the adequate security for my release, the bail should be granted. Now, if you look at section 132 of the GST Act, what it says is that the offenses contained in clause A, clause B, clause C, or clause D of subsection 1 and punishable under clause 1 of that subsection shall be cognizable and non-bailable. Now, what are these offenses? Supplying any goods without issue of invoice, issue invoice without supply of goods, availing input tax credit using the invoice or bill referred to in clause B, that means a paper invoice, fake invoice, or fraudulently availing input tax credit without any invoice or bill, or collecting any tax but not making payment to the government within a period of 3 months from the date on which the payment become due. And if the amount of the tax evaded is more than 5 crore rupees, then it shall be liable for imprisonment for a term which may extend to 5 years and with a fine. And these offenses are non-bailable and cognizable. Cognizable means without a warrant. The arrest can be made without a warrant. And non-bailable means it is not that the bail cannot be granted at all. But within 24 hours, the arrestee will have to be produced before the magistrate. Now, the magistrate has the power to grant bail. Now, the jurisprudence with respect to the circumstance in which the bail is granted are well elaborated in various Supreme Court judgments. Essentially, the provision is that if one is not a repeat offender, he has committed offense for the first time, and is unlikely to tamper with the evidence, and he is going to cooperate in the investigation, and there is no flight risk, that is not likely to run away, then he should ordinarily be granted bail. Bail is a matter of right and jail is an exception. So if the person who has been arrested is able to demonstrate to the court all of these conditions, that he is not likely to flee away, is going to cooperate in the investigation, and he is the first time offender, and he will not make an offense while he is enlarged on bail, he is not going to influence any witness or destroy any evidence, then he can be granted the bail. Now, there are other provisions relating to bail also, which I would like to discuss. One is the right of a anticipatory bail. This provision is very important, considering that sometime when the department summons a person and it is anticipated, considering the magnitude of the allegation which is surfacing, that is likely to be arrested, then one can approach the either session court or the high court for securing anticipatory bail. There are further principles of bail that while granting a bail or an anticipatory bail, the condition imposed should not be such that it is impossible to meet them. In the context of GST Act also, now the Supreme Court has decided in various cases that if impossible conditions are imposed for either granting bail or impossible bail, then those conditions are not valid. Now, under section 167 of the CRPC or 187 of the BNSS, there is a concept of default bail. Default bail means that in the context of the GST Act, if suppose within 60 days, the concerned officer is not able to furnish the formal complaint before the court, that is a charge sheet, which is otherwise called in the context of the criminal law, then one is entitled to a default bail. Secondly, under section 436 capital A of the CRPC or 479 of the BNSS, there is a concept of maximum period for which one can be kept in imprisonment while the investigation or inquiry or trial is going on. Suppose within 60 days, the charge sheet is filed, but the trial is continuing and trial is not getting over any soon. Then one is entitled to a default bail within the purview of section 479. And I would like to share with you would like you to go through section 479 of the CRPC or BNSS with respect to the concept of default bail. One second. Sorry, it is 481, where a person during the period of investigation, inquiry or trial has undergone detention for a period extending up to one half of the maximum period of the imprisonment is specified for that offence under that law, he shall be released by court on that bail. Provided further that where the offence is, whether such person is a first-time offender who has never been convicted of any offence in the past, he shall be released on bail by the court if he has undergone detention for the period extending up to 1/3 of the maximum period of imprisonment specified for that offence under that law. So, meaning thereby that under the GST Act, the maximum period of offence, if the amount exceeds 5 crore rupees, is 5 years. And if one is a first-time offender, then 1/3 of that period, if one is already undergone, then one is entitled to a mandatory bail under section 481. Or if one is not a first-time offender, then one is entitled to bail after expiry of one half of that period, that is after 2.5 years. So friends, with this, I conclude my today's discussion. If you have any further query, then I would love to take them. Thank you very much.
Sir, I think there are just two questions in the chat box. I'll just read out to you. Although they don't seem to be related to our topic of discussion. But there was one question, sir, whether GST leviable on RCM basis for service received from Canada to domestic branch company and payment and engagement of professional has been done by the foreign Canada branch. In that case, will GST be leviable on RCM basis, sir?
So you see, if just it is a matter, if suppose it is ultimately relating to the services received and the payment made, I must have received the service from a non-resident and the payment also must be done by me. Only then the RCM attracts. From the query, it is not very clear whether service is also received by me or not. The engagement may be done by the foreign branch, but if suppose the service is also received by foreign branch, I am just making the payment on behalf of the foreign branch, then in that case, in my opinion, the service is not received by me. And if that criteria is not satisfied, then just because it is merely a transaction between a Canadian branch and the Indian entity, and we'll have to look into whether that transaction will fall within the purview of the RCM. But according to me, since no service is received at all, so it should be in the nature of a capital transaction, where the payment is made without any corresponding receipt of the service, and it should not attract service tax or the payment of GST under RCM.
Thank you, sir. So there was another question. If an RTP is using a particular HSN and later on he realizes that such an HSN is incorrect, so whether he can switch its HSN down the line, given that it will lead to changes in the rate of tax, say from 18% to 12%.
Yes, absolutely. I mean, there are number of judgments on this particular issue that there is no estoppel under the law to correct an error of the law. So just because I've been classifying it under a incorrect heading, it does not mean I will be debarred from correcting the classification from a future timeline.
All right, thank you, sir. I think there are no more questions. And so
Right.
before concluding this session, I would like to take this opportunity to present an e-memento on behalf of the entire organizing committee as a token of gratitude and appreciation, sir. So kindly
Thank you.
accept it.
Thank you very
So
much.
thank you so much for such an enriching session. Honestly, what I used to believe is that all these topics like interplay of GST with any other law is basically a very advanced level discussion and it is not really relevant for our day-to-day working. But what
Correct.
I understand from this session is that no law can be read, interpreted or understood in isolation. We have to actually draw jurisprudence from other laws in order to really comprehend what is written in the GST law. And so thank you so much for sharing your time and expertise with us. Thank you so much, sir.
Thank you. Thank you, Sakshi.
Thank you, sir.
Thank you for
So
this
for all the
opportunity.
participants, the recording link will soon be available and the certificates will be sent to you all over email. Thank you so much. Thank
Thank
you
you.
once
Thank
again,
you.
sir.
Thank you very much.